Top business write-offs for STRs. When you are operating an STR, you are operating a business and you should treat it as such. One of the best ways to make sure you are keeping as much of your income as possible is through business write-offs on your taxes. These reduce your tax burden and allow you to continue to reinvest in your properties. Of those write-offs, there are the standard ones, and then there are more rental-specific ones to keep in mind. I'm going to give you a basic rundown of tax write-offs for your STR business, but please keep in mind that I'm not a tax consultant or an accountant, nor do I play one on TV. Here are some standard business write-offs. Travel expenses. If you drive to your rental property, you can deduct the percentage of fuel, service, insurance, and car payment expenses you have dedicated to your business. Say you drive 20,000 miles in a year, and 5,000 of that is STR specific, visiting the STR, running errands to buy supplies, etc. Your usage is around 25% business and 75% personal. This adds up. Also, travel to conferences specifically related to your STR business can be counted as well. That includes airfare and accommodations. Meals and entertainment. If you provide co-host services and are wooing a property owner you want to do business with, keep your receipts for this exemption. The same if you end up purchasing a meal for an employee, subcontractor, or a guest. Office expenses. Need a new printer, scanner, computer for your business? Even if you are spending money on smaller items such as printer paper, staples, etc., we can write them off under office expenses. Co-hosting expenses. Do you split your profits with a co-host? If so, you definitely need to keep track of it for your end-of-year taxes. Just as with a cleaning service, this is a write-off for you and a taxable item for your co-host. If you don't track it, you could be on the hook for 100% of the earnings, whether or not they have all gone to you. Depreciation expense. Here's a cool little tidbit I learned on depreciation. Residential properties depreciate over 27.5 years, while non-residential properties depreciate over 39 years. If your short-term rental only averages 30 days or fewer as an average rent period, it would classify as transient. It is therefore classified as a commercial property and depreciates over 39 years. The above are standard business deductions you can claim on your taxes. That isn't where it ends, however. STRs have other expenses that can be written off as expenses come tax season. Let's take a look. Cleaning services. Anyone you hire to clean your property, whether it is an individual or business, is a tax write-off. I only use this once or twice per year for now, but in the future, I hope that when my 4 STRs are in full swing, I will be in the market for more help. That would be a lot of cleaning to do all on my own, 7 days a week. Insurance premiums. Whether you carry landlord insurance or short-term rental insurance, both types are considered a business write-off. Lodging taxes. Does your municipality charge lodging taxes? If so, you have another built-in write-off. Security systems. Installation of burglar alarms, the cost of monitoring them, and even security cameras and monitoring fees are considered tax write-offs. Renovation costs. Your costs for renovating a property to get it ready to be a short-term rental is also a write-off. If you decide to add a room, even an amenity such as a hot tub, these are considered a write-off. Furniture and supplies. The list is long. Furniture, appliances, and the supplies necessary to stock and run the STR, right down to the toilet paper, are all write-offs. Various other rental expenses. Mortgage interest, property taxes, utilities, and more fall under this broad category and can be used as tax write-offs. Tax write-offs reduce your tax burden and are a great way to mitigate the cost of doing business. This chapter has covered the bare basics, and I highly recommend Nolo's Every Airbnb Host's Tax Guide for an accurate and up-to-date list of what you can and what you cannot use for a tax write-off. Next up, financial tracking.